this liquidity here. Within this order block area, the move up, what we have got is this wick to this wick right here. That on its own is a viable entry for a sell. So if you are a higher time frame trader, this is a perfect example. You know, it's nothing wrong with that at all. Now, for me, the reason I wouldn't take this trade is because that stop loss is too big. And I'm an intraday trader. I trade on the smaller time frames, and I'm in and out within an hour or so of trade. Sometimes I'm in and out within minutes, you know. But if you take it here, you know, let's look at targets. I mean, we've got loads of targets being formulated. Even if you went here, you know, that is a one to one. It's not really good. If you went to the 50% around there, it's nearly a 3 to 1, a 2.5 to 1. If you come up here, it's a 3 to 1. You know, so you're looking to try and take an entry there, or come up to this area here for a 4 to 1. That's a really good entry there. But you obviously have to know that when price gets there, it might not come that far. So what we're going to be looking for is for price to hopefully travel higher and then give us the sell model that we spoke about, targeting these areas here. But obviously it doesn't have to do that. This is just an example of what we're looking for, and price is carrying on. So we can't measure the range yet because we're still dropping. If you spot that on the 1 hour, how do you look for it on this? How do you look for it on the smaller time frame? So so on the 1 hour, this is now a point of interest. So on the smaller time frames, because the price action doesn't actually exist at the moment, you know, but literally, usually the times to find it are right on the open of the session. So, you know, think of this as wherever it is. You know, think of this area here as your point of interest. So you could have entered here on the 5 minute, but we waited for the 1 minute for that to happen. So you're literally going to wait for the 15 minute to create the same thing, and then you're going to wait for the 1 minute or whatever you want. It really depends on how aggressive or conservative you really want to be with your areas. So another one, we were on here. So here we go. Look, what have we got right here? Daily time frame. Price has come higher, swept liquidity. So we've got that liquidity sweep right now. Price has broken below the structure here. We've got 1, 2 candles. That there is your order block. Now, price within here, there is imbalance. We actually came higher. We came to the last up candle. And when you're in here, it's all about time and price for what you actually want to look for. Because during the New York session today, you had a fucking amazing opportunity. And it was literally right here. And the reason you identified that is because there's liquidity being built. So 1:30 is the New York Open, which is, Lonzo will have to correct me, I think it's 8:30 Eastern. So then we see the drop off, we see price structure here. All these people are being manipulated into the markets. Yeah, 8:30. So 2 o'clock, manipulation happening because everyone thinks the sales are happening here. But there is obviously the daily area, which we're in right now. Price is coming down, loads of choppy price action happening. It's all about being patient. We see this liquidity being created. Price is pushed higher, broke down. Now, this here isn't an entry for me, because even though we came into this area here with this distribution, there wasn't any imbalance. So it's a case of waiting. And what I can see is that this high here was was broken by that high there, and aggressively we sold off. Now we've got this up candle, institutional area, because it did take out that candle there. So that's an FU candle. Price broke lower and came back, filled this imbalance, and came right into that candle. That there is an entry because it's distribution above the highs and it's within the daily candle. And you could very easily have, I mean, if you'd held on to that as of now, where is it? So that's where price action is right now. So that's an 18 to 1. If you put 1% on that, it's 18% in your account, you know, just by being patient and waiting, because it's given us such an obvious area of imbalance. It's given us a really nice candle. So, you know, just to put that into perspective, if you've got a £70,000 account with FTMO and you've just done 1% on that, that's £12,600 you've just made. If you're doing 0.5% to be really conservative, that's half £6,000. You know, it's just incredible. And this is, you know, absolutely amazing price action. Now, where do you want price to go from here? Well, we've reacted and we've actually broken structure on the 4 hour. So as of now, you know, this area here, 1, 2, 3, is the entire move up, which broke this high within our daily area. Is it fairly regular price action happens often? So yeah, Nina, basically, but 2:30 until 4 p.m. is your sweet spot for this type of action, if that makes sense. So 2:30 or 2 until 4 o'clock. After 4 o'clock, it gets a bit ropey. And I wouldn't really do any trading after 4 o'clock. But yeah, so them 2 hours this is where you're going to find this stuff all day long. Liquidity grabs, imbalance, things like that. So that is just where, that's why I always trade. I very rarely take trades in London unless it's on Euro USD. You know, yeah, London time, that is 2 o'clock. So for Lonzo up in the USA, or anyone that's in the USA, it's 9 till 11. Okay. So yeah, basically what's happened now is price has broken structure. So what we've also created is this imbalance right here. It's huge, but it's happened within our model. There's your push up. We've got this liquidity, we've taken it. This is the imbalance that's been created. So, you know, I reckon the way price is dropping tomorrow, I'm probably going to be looking for accumulation to go higher, targeting these areas here, because I don't think we're going to get up here by the end of the week. But what may happen is price may just dip into here and then carry on. In fact, I wouldn't mind betting that is what happens. And if this here now has to be acted as your point of interest, because let's hope the Asian session where there's less volatility is kind of just building and building and building and messing around. And then suddenly, you know, London session, we get, you know, a little high, New York session pops into this imbalance, and then suddenly we get this breakdown. And then that's the way you kind of find the entry. So that could be sort of 3 o'clock tomorrow, or 2:30 tomorrow GMT time, or 10 o'clock Eastern time. And then there's your kind of entry. And if it happens, yes, you've got imbalance above, it's kind of a red flag, but it's distributing. So take it. You know, why don't you look for an entry with a long candle at the left at 13? Here, you can do. You know, this is the thing at the moment, you know, looking at the higher time frames, we are in an area where we could sell. So Luke, basically what will happen is if price gets down to here, as an example, and decides to start accumulating, then yeah, we can definitely change our bias around and, you know, look for price to do that, even if it's a buy into this for a long-term sell. You know, this is just the sell model that's been presented at the moment. You know, we don't know, because we might wake up in the morning and be all the way down here. You know, we really don't know where we're going to be. You know, and when you look at the daily here, you know, this could be the range which broke structure from here, pressed higher. And then when you look at the weekly, you know, this here is an area it could accumulate. You know, looking at the monthly as well, we should distribute. Okay. No, I mean the one at 14-hour entry to go long. On the 4 hour. So 14-hour, you mean down here? It really depends if it accumulates. You know, it really depends if it accumulates or not. You know, we've come below this low. And the thing is, right, tomorrow, it probably will be a day to look for longs, because if we close above here on the 1 hour, so, you know, looking at what structure's doing right now, you know, looking at here, if we react at that area you're talking about and we close above on the 1 hour, then I would be looking for price to potentially come in and then do that again to take us higher. So that was, really good opportunities there. And yeah, that there is your perfect sell model. And again, I'll take pictures and screenshots and things like that of this. So it's obviously there for you as well. And there was one here somewhere on gold. So we actually called this area out. If you remember, I don't know if who's into gold on this community, but basically, look at what happened. This was our so OTE stands for optimal trading entry. And that is basically a measurement of the fibs, which is something you're going to learn all about if you're not sure on the course. But essentially, it's a sweet spot, which I'm sure a lot of you obviously know. But if you don't, this is basically 71 to 88%. And that there's with the candle here, the last down candle before the up move, which is your area here. So price reacted to the upside here. So you had a lot of opportunities to buy inside here. Now I know some people looked for trying it on a smaller time frame and lost. But again, if you're a 1 hour trader, there's nothing wrong with that entry. It's actually a perfect entry because price aggressively pushed higher, slowly came down, took us in and pushed higher. You could take this trade and be in profit. Now, obviously price has come down again. It's reacted here and that's fine. But look at what we did before we came into this area here. We took this internal liquidity. It's exactly the same as the model, which we did. Have I saved it here somewhere? Not that one. So there's your model right there, the liquidity. Does that make sense? So your internal liquidity is right here. Price is pushed down, aggressive push up. Now you could wait for accumulation to go even higher because 4 hour high, flags down, 4 hour break. We're now in an area where we could definitely go higher. The big flags is this liquidity down here, but if it accumulates on a smaller time frame, again, so if tomorrow we get price action which just comes above that high there, then on a 15-minute, a 5-minute, whatever, look for that to happen. If that happens in the London session, that's the trade entry. And if you're asking where do I get in on here, well, the entry model is here, imbalance, internal liquidity. If it doesn't have to be internal liquidity, but if it's got imbalance, that's the entry. I took that sell. You sold up here, Rachel, did you? Yeah, perfect. And that was in this candle here. So let's have a look at it. So where was your entry? Was it right here, or was it on a lower area? So was that imbalance? So there was imbalance there. Again, really nice entry. So that barely tapped it, didn't it? So essentially, yeah, you waited for. I mean, did you literally press sell right here? Yeah. Well, it got you into profit, and there's nothing wrong with that at all. So that there. I mean, essentially, Rachel has got it on point because there is imbalance right there. Now, we didn't quite get into it, but that's fine because Rachel's earned that money today. But this area here is your up move. And there's imbalance, comes in and sells off. Nothing wrong with that at all. Really, really good entry, really good sell area. It's happened within this 1 hour candle here, literally tapped into this institutional FU candle. Well, it's more of an institutional candle because there wasn't really liquidity. This whole move took the area here, and then price came down. So what a trade, amazing trade. So basically what we've worked on today and showed you today, Rachel's already doing it. Intraday, you're looking at 30-minute, 15-minute charts. Yeah, I mean, yeah. So really coming on 15, 5, 1 minutes, you're kind of looking as a scalper more so. But intraday is a bit like in between swing trader and scalper. So yeah, if you're taking trades on 15 minutes, 5 minutes, things like that, that there's a really good trade. I mean, just so looking at where we are now, I mean, I haven't actually looked at this, but let's see if there's any other entries we could have potentially got. I mean, yeah, that's the entry right there. I mean, the imbalance is here, so it works really well. Price is sold off. So yeah, I mean, Rachel got it at the perfect time by the looks of it. And looking at the 1 minute accumulation, you can see there, you know, price action came down, imbalance within this order block here. So if you wanted to be really aggressive, you know, you could have literally tapped it on the imbalance because that's the move there. I don't know where your stop loss was, but imagine that. So, I mean, I don't know where price went. So price went all the way down here. It's here now. That's a 12 to 1. Its lowest point, that could have been a 14 to 1. So, you know, when you master this, that'll be your entry. And you'll be pulling out 6, 5, 10, 12 grand in the markets every day. And that's the dream, isn't it? That's what we want. So that there is a perfect example as well. So yeah, really, really nice areas there. And yeah, as of now with gold, I think really let's just see what happens in this area here. And what I would say is never look for a trade opportunity unless you are in the time zone. So whether you're trading in London, even if you are trading in the Asian session, always make sure that you see what's going on in front of your own eyes at peak time. So I think it was Nina, I said to you about trading the New York session 2 till 4. That's the only time you need to be looking at opportunities. That's when you're focusing on the one pairs and you're following price action. You know, so you're looking to take like this trade here because you can see it as it is, because this doesn't exist right now for tomorrow. So we don't know if this is going to happen or not. At the moment, we are saying what we want. Got because yeah. I don't know. Well, London session has opportunities as well. But yeah, I know that annoys me as well because I have to pick my kids up at certain times and certain days, and yeah, that does get in the way. But looking at where price is now, you can see price dropping and coming. You want price to come back here, but because price isn't up there yet, there's no point speculating what it may or may not do. So it's all about changing your bias on the day if you have to. Don't be afraid to buy tomorrow. If this is 1 hour structure here and we actually press up and then come down again, then you're buying tomorrow. If you wake up tomorrow and it's up here, then you might look at sell opportunities. If you wake up tomorrow and it's up here, you could still potentially look at sell opportunities because you can get distribution above highs. If you wake up tomorrow and you're halfway up, you could be getting buys like the one we took on NAS today, but they will present themselves during the time you're looking to trade. It might happen at 12 o'clock. It might happen at 2 o'clock. It might happen at 10 o'clock. So it's about just keeping an eye on it when you're looking to take a trade, because they're all around, they're all around. And this is just 1, 2, 3 pairs we've done. We haven't even gone into the other pairs. And it's, look at the amount of pairs you've got to potentially look at. It's just incredible opportunities that happen. And this is typically something that happens within your gold, your indices and things like that. Are there any questions at all on this? I appreciate it's been quite a lot to jump into, but hopefully, because I've noticed we just had a few of those questions about like, well, what, where and when and how. Hopefully that has simplified a few things for when you're now looking to get into the markets. And as I say, guys, we are going to really go into some detail on the course with it as the modules come out. So, once you've gone through that, it will just be like clockwork. But this is just to try and get you earning while you're learning as well. And if you're unsure, they're the entries you want to be looking at. It really depends on if you wanted to take it at the candle or at the imbalance or in the middle of the candle. It's just at your own risk, if that makes sense. But if anyone's got any, charts or anything like that they want to look at, so module 1 comments no more. Yeah, so module 1, I think is probably going to be one of your most important modules in the whole course, because even though it doesn't go over trading, it goes over laying the foundations to become successful, not just at trading, but at anything in life. Because there are multiple ways to earn income, passive income. And, hopefully as I get to know you guys more and you become more interested in learning about that side of things, I can open you up to all these different opportunities. And there's a few at the moment that are just incredible, that are really nothing to do with trading, but trading is just is going to be basically one of your assets, one of your many assets that you want to build to get yourself to financial freedom. And that's what you want to achieve with it. Just think of trading as just another asset, and that's kind of the mindset you need to take. And that's based around module 1 as well. That's the foundation. You're designing what you want to do. And you want to go into designing what you want to do, wants to plan how it happens. Passive income look really good, but it seems like so much competition. There's no competition at all, because the way I could show you how to create passive income, there's zero competition. Trust me. Message me if you want to know more about that. Message me if you want to know more about that. So where are you looking here, Lonzo? Euro. Amazon. 15-minute. So wait for break of structure. So what I would say, I mean, that is just so much consolidation. I would, the thing is, tomorrow, I'd see. I mean, you want something like that to happen because you want both sides to be taken out. I mean, I understand now, Lonzo, why you didn't get into a trade today, because no one wants to be inside there. That's just awful. But yeah, essentially, I'd be waiting for something like that to happen, or at least a break above there to come in. Someone asked earlier about the imbalance, which one to go by first. And I don't know if there's any imbalances here, but essentially, if you take this as your order block pushing higher, and you can see price action here came into the imbalance. We didn't really have any above, but we did, if you go down lower, I'm sure you'll find imbalance that hasn't been tapped into. So like this imbalance here was left, but this imbalance was tapped. So that's a good example of getting in on imbalance. And you literally just could have put in here, in that case, be aggressive. Don't be afraid to be aggressive and take price down, because even just taking it to here to 4-1, even if you went at the top there, that's a 3-1. So yeah, Euro's just, thing is, towards the end of the year, Euro was incredible, I thought, but opening the new year has just been a bit rubbish. And this is the thing, if price action just is confusing, just walk away from it. Walk away from it. And what I would also say, another tip, if you take an entry and that's happening, just get out of the trade. One thing that is going to improve you and your focus is to limit stress. This here is stressful. So if you took, let's say you played off this imbalance, I don't know, as an example, and you're targeting, wherever. If this is going on for more than 5 minutes, get out of the trade. Even if you have to take a short loss or a short win or a break even, whatever, just don't get lost in the sauce in here, because it's just not attractive. You want to be in a trade where you're selling it, this imbalance, you're in drawdown for minimal time and you're out and you're in profit. They're the entries you want. And, you will get a lot of these, but if it plays around at your entry, just get out. Just get out and wait for the next opportunity, because even if eventually it pushes higher, trust me, it's not worth the stress. It's not worth the stress. You're going to get opportunities every single day that arise, and worrying about what goes on down here is just awful. You don't want to be, you don't want to be in it. Another chart. Where was this one? Just a Swiss franc. Yeah, I mean that there looks much cleaner. That there's much cleaner. So yeah, that looks really good. You've got the imbalance here, point of interest. So it could react from here. So this is a 1 hour time frame. Maybe look at 5 minute structure around here, because if it distributes, get in there. But absolutely, it looks good. I know some very good traders have very big stop loss. Which it really depends on the trade. It's just me personally. I don't like big stop losses, because I like to I like to be around quicker. So this 1 hour here, for example, that's fine. But that would have got me at the most a 4-1. I'd have probably come out at a 3. So realistically, the way I play this trade around now, when it gets to like 3-1 or it broke above here, I'm setting a break even. When it goes above 3-1 or it starts distributing here, because this 1 hour candles here, that would have been your first target. So you'd have come out at profit there. If you held it, I would have probably come out at a 3-1. In case, because I really would have wanted target to come here, which is above a 4-1. But if I was to put it down here, that's just not good risk reward. Unless they are if you're trading on the daily time frame, then your stop loss is going to be much bigger. But I'm looking to take things a little bit tighter, if that makes sense. So any more questions, guys? Anything anyone wants to know? You know, as I say, as of tomorrow, we'll see what price action brings to us. But hopefully you've gained some value today. And I will put this in the mentorship portal. And if you have any questions, let me know. And I would encourage you guys to put your trades ideas in the chart markups section as well, because that there is going to help you out. What time you think you send in alerts if you do? Luke, it really depends on when I see the trades. Usually there are in the New York session. If I see higher time frame trades, like we saw the one on AU, we were looking at a 1 hour candle. I sent that the day before it happened. But this is another example. We broke above there and then we came lower. We cancelled the trade. So that was an alert. So yeah, hopefully, guys, you gained some value. If you need anything, please don't hesitate to get in touch. And have a great evening. I'll see you on the group chat, guys. Well done.